My name is Dan Scutcherino. I'm the Customer Learning and Development Consultant here at RightCapital. And in our presentation today, we're going to be focusing in on analyzing long-term care needs in RightCapital. Long-term care is something that's always topical. It's not something that everyone will end up needing, but it's always something that we need to be prepared for. As we all know, the costs of long-term care can be a significant financial burden, especially considering that it isn't covered by the likes of Medicare or even Medigap in most cases. So we're going to be taking a closer look at long-term care in RightCapital today. So let's quickly go over our agenda before we dive in here. Perfect. We're going to start things off with a review of the data entry process for both long-term care costs as well as long-term care insurance policies in RightCapital. We're then going to pivot into the long-term care insurance analysis and provide an overview of how that tool can be leveraged within a client plan. And we're then going to spend some time in the retirement analysis module, specifically looking at adjusting long-term care expenses and durations within a proposal, as well as proposing long-term care policies and seeing the impact there. So as always, we will be doing a live Q&A at the end of our presentation today. So if you do have any questions as we're making our way through, please feel free to write in using the questions field in the GoToWebinar control panel. We've got about 30 to 35 minutes of prepared content to get through today, and then I'll be sticking around to answer as many questions as I can until the top of the hour. Perfect. That being said, I am going to switch over to my RightCapital login here, so bear with me just a quick moment and we can get started. Perfect. So here we are in my RightCapital Advisor portal. One final reminder before we dive in today, especially for those of you who might be a little bit newer to RightCapital, all of our educational webinars, including our webinar today, are recorded, and we do post these within the RightCapital Help Center shortly after the presentations end. So just to quickly show all of you where you can find the recording here. This is something that you'll be able to find in the Help Center here within the webinars page, specifically within the Watch Past Webinars area. So like I mentioned, shortly after the presentation ends today, this will be posted here at the top of this table, so you can watch this recording back at any time. Perfect. So let's dive into our case study for today. We're going to be looking at a joint plan here for Allie and Richard Jones. And just to get things started here today, let's start with a quick overview of the blueprint module here within the plan, just to get us all acquainted with these clients and what we're working with for today. So here we have Allie and Richard Jones. They are currently in their mid to late 60s. We can see that in terms of current net worth, these clients are sitting at a little over $2 million. We can see that we can see all of their assets and liabilities here broken out by owner, their various investment accounts and jointly held assets. Within the goals area, we can see that Richard is already retired last year in 2023. We can see that Allie is planning to retire at 67 in 2026 here. And we have a goal as well to fund a grandchild's college education here within the plan. Importantly, for our purposes today, at the very end of our goals timeline, we can see the annual retirement long-term care costs kicking in within this plan here. So we'll be taking a closer look at this card in just a few minutes here. And just to wrap things up here, we can also take a look at our income, expenses, and goals. And most importantly, we can see that these clients are spending around $6,000 a month in terms of general living expenses. So that's generally what we're working with here in this plan for today. While we're here in the profile area of the plan, we can also take a look at the data entry process for long-term care costs and duration, as well as long-term care insurance policies. So starting with long-term care costs, that's something that can be entered into the profile goals area here. And there is actually a card that's pre-populated by default within every financial plan that you can utilize to reflect those long-term care costs. And that's going to be this card to the far right here, the annual retirement long-term care costs. If we click into this card, we can see some more specific details here. So what we have in terms of costs at the moment is the national average for in-home care. And there's actually a couple of additional national averages that you can choose from here as well. So just to provide a bit of context, these national averages are based on published research by Genworth Financial. So that's where we're pulling these figures from for the national averages for things like assisted living, as well as nursing homes. These numbers are updated on an annual basis. So we're currently using the most recent data from 2023 here. And as I mentioned, it is set to the national average for in-home care by default, but we can override that with a custom amount here if we'd like. Depending on where in the country our clients live, we all know that sometimes these national averages aren't always accurate. So if need be, you can enter whatever dollar amount you'd like to see here for these annual long-term care costs. In addition to the cost, this is also where we can dial in the duration for long-term care. By default, this is set to the last 2 years of each client's lifetime, each client's plan. But again, you have the flexibility to tailor this duration anywhere from the last 1 year to the last 10 years of a client's life. We can choose to have those long-term care expenses being incurred within the plan. Something to note here, these are values that are in today's dollars. So if you are entering a custom amount here, it's entered in today's dollars. There's a little reminder here within the middle of the data entry drawer. And these values are inflated automatically in RightCapital based on a specific inflation rate. So just as a quick refresher for all of us here, RightCapital does incorporate several different inflation rates for different types of expenses and goals. You can actually view your inflation rates within a client plan by navigating to the gear icon, settings, other assumptions tab here. So in particular, when it comes to long-term care, that's something that's going to use this healthcare cost inflation rate, which by default is set to 5%. But again, you have a lot of flexibility in RightCapital to update these values as you see fit. So you can always enter your own custom assumption here for healthcare cost inflation. Perfect. The last thing I want to mention as it relates to long-term care costs, and duration, I want to make sure that everyone's aware that those default selections that I mentioned, the 2-year duration for long-term care, as well as the costs for long-term care, that national average, you have the flexibility to update those values, the default values, if you want to see something other than those particular selections. So in the advisor portal here, you'll find a client settings tab. Depending on your particular account setup, it may be in the upper menu bar here, but it might also be within this more menu here, represented by the 3 dots. So just something to be aware of there, but within client settings, you'll find a client presets area. And within the client presets area, if we scroll down a bit here, you'll find a plan parameters section. And within this area, if you'd like, you can choose to update the default selections for both retirement long-term care duration, as well as the cost. So, if you have a client that lives somewhere where maybe these national averages aren't quite, an accurate representation of what they can expect, you can choose to enter a custom amount here. And for all of the new client plans that you create going forward, this will be used as the new starting point within that long-term care card. And you can do the same thing for the duration as well, if you'd like to see something other than 2 years as the default selection. So I just wanted to make sure that I pointed that out here. Again, that's in the client settings, client presets tab, where we can make those adjustments. Perfect. Let me click back into our Jones plan here. In addition to the long-term care, cost and duration, we also have the ability to enter long-term care coverage, existing insurance policies into a client plan. So we're going to take some time here into the profile net worth section to take a look at that data entry process for those insurance policies. To add a policy, we can click the Add Account button here in the upper right. And then if we hover our mouse over insurance, we'll see all of the different policy options that we can choose from here. So you'll actually find two different options for both long-term care policies as well as hybrid long-term care policies. So we're going to look at both here today, but we're going to start with long-term care. So we'll click that button there to add this policy to the client's net worth. And we'll walk through the data entry here together. Now, for the most part, these are relatively straightforward entries, but there are definitely a few more nuanced aspects to be aware of. So starting with the policy owner at the top here, as well as the insured individual, we can dial in both of those. So we'll say that this is a policy that Allie both owns and is listed as the insured individual on. We can enter the date in which the policy was purchased here in the upper right. We can then enter the annual premiums on the policy. So we'll say $1,200 for our annual premiums. We can determine the duration of those premiums. So Allie's end of plan is the default selection for a policy that is owned by Allie, but of course we can choose a specific number of years, a specific calendar year in which to end these premiums. The most important thing to note in this regard is that if you do have lifelong premiums like this, the premiums will stop automatically in the year in which the expenses begin. So, that will occur automatically within the financial plan. So you won't have to worry about there being overlapping premiums, while those long-term care costs are being incurred. If those premiums are going to be inflating by a specific percentage each year, that's something we're able to dial in here as well. I do want to draw particular attention here to the premium tax fields on the right here. Something to keep in mind here, this is set to pre-tax by default, which will reduce wages, line 1 of that 1040 within the plan. The reason I draw particular attention to this is just because in my personal experience, helping advisors enter these types of policies, the premiums tend to be after tax, which is the other option you can select here. So by selecting after tax, that will instead flow into the Schedule A as an itemized deduction. So you have the option to choose both, pre-tax or after tax, but just something to be aware of there in terms of the taxation of the premiums in particular. Next, we have our daily benefit. So the most important thing to keep in mind here is the fact that this is a daily amount that we're entering here. Definitely don't want to enter a monthly or, God forbid, an annual amount here by mistake. So just something to keep in mind here with the benefit amount. If the benefit is going to be inflating, we can enter the inflation percentage. Again, in my experience, anywhere between 3 and 5% is pretty typical there for the inflation percentage on the benefit amount. You can even specify whether that's simple or compounding interest. So a lot of granularity here when it comes to inflation on the benefit amount. And then towards the bottom here, we can specify our benefit period, how long, the number of years in which these benefits will be paid out. So the main thing to keep in mind with this particular input is that this won't pay out in excess of the actual long-term care duration within the plan. So the policy entries here in the net worth sort of talk to the the goal cards that we just took a look at in the goals area. So in a situation like this where we have 2 years of long-term care occurring at the end of Allie's life, even if we set our benefit period here to 3 years within the plan, this will only pay out for those 2 years in which those long-term care expenses are actually occurring. So just something to keep in mind there. It'll never overpay in terms of the number of years that we enter here. Last but not least, we have our elimination period here, the duration of time in which these clients will have to pay for their long-term care expenses out of pocket before these benefits kick in. 90 days tends to be the most common option in my experience, but we've got some flexibility here in terms of some different timeframes. And I do want to just highlight this checkbox at the bottom as well. This is going to determine whether or not the benefit is taxable within the plan, which is really dependent on whether or not the policy is tax qualified. So you have the option here. You can deselect this if the benefit is not taxable. You can leave this checked if the benefit is taxable. And something I always like to mention, if your clients maybe aren't sure of some of these more nuanced details related to their policy, we typically recommend having them reach out to their insurance provider, and they'll be able to provide those details for you. Once everything is entered here in the policy, we can click Save in the lower right, and that policy is going to be added to the client's net worth and to the client's current plan here in RightCapital. While we're here in the net worth area, let's also take a quick look at the hybrid long-term care policy as well. So I'm going to click Add Account again in the upper right, hover back over Insurance, and then choose the hybrid option. And for anyone who might be unfamiliar, these policies are essentially a combination of life insurance and long-term care insurance. So there is a good deal of overlap in terms of data entry, but the main difference is that these policies ask for a death benefit rather than a daily benefit. These policies function a bit differently in that they allow for the acceleration of the death benefit to help pay for long-term care expenses. So in order to dial that in, there are some additional fields here at the bottom for the acceleration period as well as the extension period. So just to provide a quick and easy example for all of us here, let's say that the death benefit on this policy is maybe $200,000. And maybe this policy has an acceleration rider of 2 years. That means when long-term care kicks in within this client's plan, this policy will pay out $100,000 each year for 2 years, which is just our death benefit amount here divided by our acceleration period. In some cases, these policies might also have an extension rider, which is simply a continuation of these benefits past the base policy's original death benefit. So the extension period won't change the amount of the annual benefit, just the duration. So maybe this policy has an extension of 1 year, let's say. This policy will now pay out $100,000 each year for up to 3 years. Our original 2-year acceleration period plus the extra 1 year due to the extension. So hopefully that example helps. I know these types of policies can seem convoluted on the surface, but the math's actually a bit more simple than you might expect. Of course, if there are no long-term care expenses occurring within the plan, this will essentially function as a life insurance policy, and this death benefit will just be paid out like usual in that case. Perfect. So next up on the agenda for today is the long-term care insurance analysis, which is a dedicated tool that lives in the insurance module of each and every client plan. So if I click into insurance here at the top of the page and then click into long-term care, we can find that dedicated long-term care analysis tool here. And just to provide a quick overview of what we're looking at here in terms of the visuals, this bar chart is going to reflect the last 10 to 15 years of a client's life, depending on the age gap, how old they are. And for the most part, what we see here is the client's overall invested assets in those final years of their plan. And in particular, we see 2 different bar charts for each year here. The blue portion is the client's invested assets without long-term care expenses factored in here. So we're backing those long-term care expenses out and looking at the assets without that factor. The purple portion of this bar chart is the invested assets with long-term care expenses, as well as any existing long-term care coverage. So the purpose of this side-by-side comparison here between these 2 values is really to show clients the potential impact that long-term care expenses can have on their investments as a whole in the final years of their life here. And even with that coverage for Allie that we entered here, we can see that their investments still take quite a hit in these final 5 years or so when the long-term care costs rather begin to occur within the plan. So the idea here is that we can really show the impact of proposed coverage in terms of helping to maintain a client's assets over time. So, Allie has some current coverage that's being fed in here, but at the moment, we don't have any existing coverage entered for Richard. So this could potentially be an opportunity to maybe propose some additional daily coverage here. Maybe we want to see what would happen if Richard has a similar policy to the one that we entered for Allie back in the net worth area. So we can use the slider here to dial in our additional daily coverage, our proposed coverage. And you'll see some similar fields here to the ones that we looked at back in the net worth. We can dial in things like the proposed benefit period, the elimination period, and that proposed inflation adjustment on the benefit. So we can set this to match that policy we entered for Allie if we'd like. We can even reflect the premiums here if that's something we want to be factored in. And at the end of the day, in the chart here, this will update with an additional green portion, specifically showing us the impact that our proposed coverage will have on the client's assets in those final years. So we can really see here, how that helps to maintain their assets, in the final years of their life. So if you're trying to make a case for purchasing some additional long-term care coverage, this can be a really powerful tool for quickly and easily demonstrating the benefits of that proposed coverage in terms of helping clients maintain their assets here, as well as in terms of total coverage. There's an additional tab here to the right of the impact tab where we can see the expected long-term care expenses for each client based on what we entered back in the profile goals area. So we can see that for both of these clients, we can expect some pretty hefty long-term care costs within our current plan here. And the current coverage that we entered back into the profile will feed into our pie charts here. So we can see that that policy we entered for Allie in the net worth is covering 95% of those costs here. We can also see on the right here the coverage that our proposed daily amount will provide for Richard here in the lighter blue portion of this pie chart. So, again, we can really show the value, the benefits of that additional daily coverage here within the dedicated long-term care analysis tool. Perfect. So that's an overview of the dedicated analysis tool here in the insurance module. We are going to take some time next to pivot into the retirement module, which is really the other area in RightCapital where we can make some of these comparisons and show the value of proposed coverage. So sort of to bring things full circle here, we're going to spend some time in the retirement section. We have a lot of flexibility here to model different situations when it comes to long-term care and to see the impact of those what if scenarios on a client's probability of success and on their plan as a whole. So, first things first, before I start making adjustments and tweaks here in the retirement analysis tab, I do just want to quickly take us into the retirement cash flows area, specifically the summary tab here. Within our summary table, we can see all of the different elements of our long-term care costs and coverage taking place. So I do just want to briefly show everyone where all of this information lives here in these cash flow tables. If you're looking for the premiums on the long-term care policy, that's something we can find in the expenses column here of the summary page, specifically in the insurance premium section here. We can see that $1,200 premium for Allie inflating over the course of this client's plan. And like I mentioned, once those long-term care costs kick in those last 2 years, those premiums do stop automatically here. If you're looking for the long-term care costs themselves, that's something we can also find within our expenses area here, particularly in the healthcare column. So you'll see here in the final 2 years of each client's lifetime, we can see the costs, the long-term care costs being incurred here. And if you're looking for the benefit amounts being paid out once these long-term care costs begin, That's something that we can find in the cash inflows section here on the left, specifically in the other inflows column here. So within this area, you'll find a long-term care insurance benefit column that you can click into. And in this case, we can see that benefit amount for Allie being paid out in the last 2 years here based on that policy that we entered into the net worth section. Perfect. So let's take another look next here at that retirement analysis section. As I mentioned, we have a lot of control here over our various aspects of long-term care. I'm starting first with the costs and the duration. So, if that's something you're wanting to adjust and play around with as part of a proposal here in the retirement analysis, that's something that's able to be added here to the action items. So we can make adjustments to both of those items for both of our clients here. In order to do that, you'll want to click the edit button in the lower right corner here. In the financial goals area at the top of this drawer, you'll want to isolate the long-term care costs and long-term care duration for both clients. And once I click save here in the lower right, those are going to be added to the action items screen here, allowing us to adjust all of those inputs. So here's really where we can start to model different what if scenarios and to address client questions and concerns. Maybe as an example, maybe Ali asks, what if long-term care is more expensive, than we've anticipated here in our current plan? Or what if the duration is longer than we're anticipating here? You can make those changes to those variables here, click the refresh button in the lower right, and see the impact of those changes on the proposed plan on the left here. And maybe we want to do the same thing for Richard as well, who, if you'll remember, doesn't have any existing long-term care coverage in the profile area. So we can make those changes again to Richard's long-term care costs and duration, click refresh, and see the impact on the plan as a whole. Importantly, the other thing that we're able to do here is propose long-term care insurance policies. So for clients like Richard who maybe don't have current coverage, maybe you've made your case to the client and shown them in that dedicated long-term care insurance analysis tool the potential value that that coverage could have. And now maybe we want to see, what would that policy look like here in the retirement section? And what impact would that have on our plan as a whole? So to propose a policy like that here, we can click the edit button in the lower right. And then at the bottom of this drawer, you'll find an Add New Items button. And within this button here, you'll find some insurance policy options, including long-term care and hybrid long-term care. So by adding these here, we can say, what if Richard were to purchase a policy similar to the one that Ali already has? And the inputs here are exactly the same as the ones we walked through back in the profile, as well as in the insurance analysis. So let's select Richard here as the owner and the insured individual on this policy. Let's say that Richard is going to purchase this policy this year in 2024. And scroll down a bit here and enter our annual premiums, our premium inflation percentage. We can make sure that these premiums end at Richard's end of plan. Again, these will stop automatically when those long-term care costs begin within the plan. We'll set our premium taxes to after tax just to be consistent. That daily benefit of $350, our benefit inflation of 3%, and then we can match the benefit period and elimination period as well. So once I click save here in the lower right, this policy is going to be added specifically to our proposed plan here. And we can see that if we scroll back up, we've seen an increase now in the probability of success, as well as the median ending assets compared to what we saw just a moment ago after dialing up some of these other variables. So the last piece of the puzzle here is that within the retirement analysis, this setup really allows you to directly compare and contrast various what-if scenarios to demonstrate the value of something like purchasing a long-term care policy like this. So if we wanted to set up a side-by-side comparison here, the first step of that process would really be to add some additional plans. In addition to this original proposal that we're working with here, we can also click this pencil and paper icon next to the current plan to add additional plans here. And in this case, because we've already dialed in some changes to our proposal, we'll actually want to make a copy of our existing proposed plan to carry over those changes that we've made in terms of the long-term care costs and duration, as well as that proposed policy. So I'm actually going to make 2 copies here. We'll call this first one, 4 years of long-term care with coverage for Richard. And I'm going to copy this. And for our second policy here, we'll do 4 years of long-term care without that proposed coverage for Richard. And once I click OK in the lower right, we'll be able to now choose on the left and right-hand sides here which plan we're working on, as well as which plan we're comparing that to. So I'll select 4 years of long-term care without coverage on the left here, and then 4 years with coverage on the right, and give that just a second here to update. Perfect. The reason I selected this plan on the left is because we do still need to make one adjustment to this proposal. By adding that proposed plan here, this proposed policy, that's going to be included by default. But of course, we want to make sure that's excluded for this comparison. So I will just toggle this from included to excluded here in the action items, and then click refresh. And we can see side by side, what those 4 years of long-term care are going to look like at $100,000 a year for both clients. On the left here, without that proposed coverage for Richard, compared to on the right with that proposed coverage for Richard. So we can really demonstrate the value of that policy side by side here by setting up a comparison like this. So, of course, there's a lot of flexibility here. You can dynamically adjust all of these action items to make any changes you'd like. At this point, you could start to incorporate other changes into the client's plan to any of the other elements that you'd like to continue to make improvements here. But generally speaking, that's how you'd be able to create some additional proposals, individually adjust the variables here, and then set up a side-by-side comparison. I do just want to quickly mention, if you click the edit button again in the lower right here, you can also choose to include Allie's long-term care policy from the profile that we entered here. So maybe we want to see what the plan looks like if we exclude both policies. You can choose to include or exclude both existing and proposed insurance policies here in the retirement analysis area.